Ever scrolled through social media and seen those enticing buy now, pay later ads? We've all been there. Maybe you're eyeing a new outfit or the gadget you just can't resist, but payday feels like light years away. Beforepay pops up, promising a solution, instant access to cash with repayments spread out. Sounds convenient, right? But hold on a second. Before you swipe and cash out, a crucial question might be nagging at you. Exactly how many payments am I signing up for with beforepay? Fear not, finance friends. That's precisely what we're diving into today. We'll crack open the beforepay system, decode the repayment structure, and ensure you're fully informed before you hit that confirm button. Now, beforepay isn't your typical loan situation. Unlike traditional loans with interest rates and varying repayment terms, beforepay keeps things, seemingly, simple. They advertise a flat fee of 5% on the amount you cash out, which is essentially borrowing a portion of your upcoming paycheck. This fee is then split across your repayments. But here's the key takeaway: beforepay offers flexibility in how you repay that borrowed amount. This is where the number of payments comes into play. Option 1, the all-at-once approach. Think get it out of the way quickly. Beforepay allows you to repay the entire borrowed amount, plus the 5% fee, on your very next payday. This keeps things straightforward, one payment, one less thing to worry about. Option 2, spreading it out for comfort. Maybe a single, larger payment isn't ideal for your budget. Beforepay understands. They give you the option to split your repayments into installments. Here's where it gets interesting. You can choose to repay in up to 4 installments. Hold on, isn't 4 fantastic? Not so fast. There's a catch. Beforepay requires full repayment within a time frame of 62 days from your initial cash-out date. This means even though you've divided the amount into installments, you still need to ensure everything is settled within that 62-day window. Let's break it down with an example. Imagine you cash out $500 with beforepay. The 5% fee adds NGN50, bringing your total repayment to $450. Splitting this into 4 installments would mean paying roughly $150.50 every 2 weeks, assuming a typical biweekly pay cycle, until the full amount is settled within that 62-day period. So, the answer to how many payments with beforepay isn't a one-size-fits-all. It depends on your chosen repayment strategy. It can be a single payment on your next payday or multiple installments spread strategically within the 62-day window. Beforepay emphasizes responsible borrowing, and that's a message we can all get behind. Remember, even though repayments are spread out, you're still obligated to settle the entire amount within the given time frame. Missing payments can incur additional fees and potentially impact your credit score. Here's the bottom line: beforepay offers flexibility, but it's crucial to understand the repayment structure before diving in. Carefully consider your budget and choose a repayment plan that fits comfortably within your means and the 62-day window. With that said, thanks for watching, and until next time, stay informed and financially empowered.